Canada's inflation cooled by less than expected last month, supporting the BOC's move to the sidelines after back-to-back rate cuts. Let's get more on this now from Michael Davenport, senior economist at Oxford Economics. Michael, thanks as always for joining us.
Good morning. Thanks for having me.
Any real surprises here along the lines, close enough?
So, yeah, I would say along the lines of what we were expecting in the broader consensus, a little bit stronger. So overall inflation, whether you look at core inflation or headline inflation, both measures were a little bit firmer than the consensus expectation, but nothing too surprising, nothing too out of line with the overall consensus. I would say broadly the inflation story remains somewhat similar to what it was last month.
And just a few individual things that kind of stood out. Gas, a big driver on this one, wasn't it?
Yeah, absolutely. So if you look at what drove the deceleration in headline inflation from 2.4% year over year in September to 2.2% in October, the primary contributor to that was lower gasoline prices. So prices at the pump fell 4.8% month over month in October compared to September. Now that largely reflected lower global oil prices, but also lower domestic gasoline prices because of the switch to slightly different types of fuels. So that was a main driver. We also saw a little bit slower food inflation compared to September. So overall food inflation slowed from 3.8% year over year to 3.4% year over year in October. That was another key contributor to the slowdown in headline inflation last month.
I imagine welcome news for the average Canadian, both of those seeing a bit of a drop or a slowdown, shall we say.
Yeah, absolutely. I mean, energy prices have fallen quite a bit over the last year or two, particularly after the removal of the consumer carbon price last April. We saw another big drop in energy prices, and that's largely continued through the second half of 2025 here. Now, on the food inflation front, while food inflation did sort of edged down from October, overall, the trend in food inflation has been higher. So if you look at grocery price inflation, it has been running above the overall headline CPI inflation rate for 9 consecutive months. And so while the rate of increase in food prices might have eased relative to last month, there's still been a rising trend in food inflation, and food prices are still quite high.
So still worrisome. And also, a key thing for so many people, their phone bills went up.
Yes, exactly. So that was one of the major one-off factors that led to the increase in core inflation last month and prevented headline inflation from falling as sharply as some had expected, certainly as the consensus had expected. So cell phone service prices rose about 7.7% month over month, year over year. And that compares to a year-over-year increase of 0% in September. It was actually the first year-over-year increase in cell phone services prices since 2023. So again, that's definitely something that consumers were feeling in October.
And I don't have the numbers in front of me, but homeowners got a bit of a hit too with insurance. And I'm trying to remember what the second one was. The number's not in front of me right now.
So another one-off factor that led to the increase in core inflation in October was property taxes. So property taxes and other special charges increased by about 5.5% or so year over year. Now, property tax increases factor into the CPI every year in October. So this was expected. And actually, it's a slightly smaller increase in property taxes than we saw in 2024. In addition to that, as you mentioned, insurance premiums, so passenger vehicle insurance premiums in particular, remained quite high and continued to be one of the largest contributors to overall inflation in October.
Anything caught your eye in all of this in the new report beyond those things?
Yeah. So overall, as I mentioned, what we did see is a larger than expected increase in core inflation. And that in part reflected a somewhat surprising increase in rent inflation. So if we look at the rental component of the CPI, it rose 5.2% year over year in October. That's up from about 4.8% year over year in September. Now, the reason that this is somewhat surprising is because it is actually out of step with other data sources that we have on actual asking rents, so market-based rents across major cities, which show actually rents that are down on a year-over-year basis, and much weaker rental price inflation picture than what the CPI seems to be reflecting. And so that was another factor that led to higher core inflation in October. But again, we think that overall rent inflation will slow in the CPI as it sort of realigns with what we're seeing on the ground and from other data sources, which show much weaker actual rent inflation.
So probably just a blip for now. And then one last question, of course. Bank of Canada, where does this leave any potential rate cuts?
Yeah, so that's a great question. Overall, as I mentioned off the top, we don't think that this materially changes the inflation picture, and we don't think it will really change the Bank of Canada's thinking all that much. If you look at the Bank of Canada's communication in its October monetary policy report, the press conferences around that, as well as in the summary of deliberations from that monetary policy decision that were just released last week, it's clear that the Governing Council feels as though the level of interest rates is currently at about the right level to keep inflation near the 2% target where it currently is, and to support the economy. So we don't think this will change the Bank of Canada's thinking at all around that. We continue to expect the Bank of Canada will hold in December and actually remain on hold through 2026.
Okay. Michael, always appreciate your insights on this. Thanks for joining us.
My pleasure. Thank you for having me.
Michael Davenport is a senior economist at Oxford Economics.